But, I think a point that's very interesting is if you want to know a way to verify the intention of a market maker in terms of what their goals are in operating versus a B-book broker, a market maker, in 90% of scenarios will have a flat book at the end of the day, right? Compare and contrast that with a B-book. I mean, Angus, you would know how much exposure are these B-book brokers holding at any given time, and for how long are they holding this exposure for?
Billions and indefinitely.
Right. So it could be weeks and months potentially.
If you don't have a large position, then you can't make a lot of money. How can you? If you're a B-book, you want the biggest position possible because you're making money from market risk. When Eurodollar went, went on a run last week or last month, those guys who made tons of money made it because clients were, on the other side of the trade, and they held onto their positions until it became an untenable position. They got closed out. So that was market risk. They made money from market risk that was in excess, probably 100 or 1,000 times the value of the spread of that product to that point in time. So by having market risk, that clients close out wins early and losses late, and therefore you want the biggest position, and volatility of the market would shake people out of their positions. So that is the nature of a B-book, and it's the exact opposite to market making.
Right, because basically in a nutshell, the goal of the B-book is effectively to get directional. Is that a fair characterization?
Absolutely.
In size.
Compare and contrast that with a real market maker. They never want to be directional. They want to be flat. Again, they're offering a two-way price. So yeah, it's a whole different ballgame. And I think what we've clarified today is you cannot confuse a B-book broker for a market maker, albeit, they may claim to be a market maker. They may hide behind the term market maker.
A market maker, to call a B-book a market maker is almost a compliment. They're not worthy for. And the reason is just because they lack the technological,
the quantitative ability to predict
because
market ticks.
It's bloody difficult to do. And to compare XTX markets with a B-book broker, it's just not very nice.